Hello and welcome to HiWayFX market news for January 13th, 2016. On Wednesday, the euro kept losses against the American dollar by losing 0.3%. Currently, the euro-US dollar pair trades above the level of 1.0817, as you can see here. During the day, the pair may react on publication data from the Eurozone. Industrial production in the Eurozone is expected to show a 0.2% drop in November, following a 0.6% growth reported in October, while growing 1.7% YY compared to a 1.9% gain recorded in October. The resistance levels for the euro are 1.0918 and 1.0945. The support levels for the euro are 1.0810 and 1.0783. The following graph shows that yesterday the British pound-US dollar pair tumbled to 1.4350 by losing about 1%. It is the lowest level since June 2010. The British pound fell to fresh 5-year lows against the American dollar on Tuesday after data showing that UK industrial and manufacturing production dropped sharply in November, adding to concerns over the uneven economic recovery. The Office for National Statistics said industrial production fell 0.7% in November from the previous month, compared with forecast for a flat reading. It was the biggest drop since January 2013. Manufacturing production fell 0.4% compared with October, well below forecast for a 0.1% increase. This morning we observe attempts of the pound to manage its losses. The key resistance levels for the pound are 1.4501 and 1.4537. The support levels for the GBP US dollar pair are 1.4290 and 1.4254. This morning, US crude oil trades in a positive area by adding about 2%. Oil trades near to the level of $31. However, on Tuesday, US crude oil dropped below $30 a barrel for the first time in 12 years, on concern that turmoil in China's markets will curb fuel demand. As Bloomberg writes, concerns that China's economic growth may slow has soured investors on the prospect for a quick recovery, turning hedge funds to the least bullish in 5 years. A rapid appreciation of the US dollar may send Brent oil to as low as $20 a barrel, Morgan Stanley said. Oil extended the 70% drop since June 2014 as volatility in Chinese markets fueled a rout in global equities, and US stockpiles remained more than 120 million barrels above the 5-year average. Saudi Arabian Oil Co., the world's biggest crude exporter, confirmed on January 8th it was studying options for a share sale, including listing a bundle of refining subsidiaries. Today at 3:30 GMT will be released information about oil inventories in the USA. It may have a big impact on the oil prices. The key resistance levels for the bulls are $32.20 and $34.50. The support levels for the oil are $30 and $28.80. Yesterday, gold declined as the metal's safe haven appeal was dampened amid a recovery in global equity markets. Today, gold loses about 0.33% and trades above the level of $1,080 per troy ounce. As Investing.com notes, despite recent losses, gold is up almost 3% since the start of the year as safe haven demand has been boosted amid a global stock market rout, worries over the Chinese economy and heightened geopolitical tensions. The recent turmoil in global financial markets added to skepticism over the Federal Reserve's ability to raise interest rates as much as it would like to this year. The key resistance levels for the gold are $1,094 and $1,100. The support levels for gold are $1,079.50 and $1,075. On Tuesday, the S&P 500 American Index closed the day on green area by adding 0.78% thanks to recovery in global equity markets. This morning, the growth is continuing. The S&P 500 Index adds 0.6% and trades a little below the level of 1950. We expect that during the day, the bulls will try to reach the following resistance levels: 1978 and 1994 points. The support levels are 1935 and 1918. Stay updated on all the key events around with HiWayFX by liking us on Facebook, follow us on Twitter and Instagram, circling us on Google+, and of course, subscribing to our YouTube channel. For more information, please visit our website www.hiwayfx.com. Thank you and have a good trading day.